Hey everyone, Chris Johnson with Money Morning. Don't get left on the sidelines with Palantir. And I know a lot of you are saying, hey, it's overvalued, CJ. Don't fall for that trap. I'm going to take the next 5 or 10 minutes or so and walk you through yesterday's earnings, just a quick glimpse at it, walk you through the price chart, but walk you through the dynamic that is going to drive this stock higher over the next 6 to 12 months. This is going to be another top performer of 2025, and you don't want to sit on the sidelines and watch it. Spend this time with me, and you'll be thankful and a better investor for it. Let's jump into it. All right, as I said, let's jump into it right off the bat. I'm going to talk about valuation in probably 5 to 6 minutes or so. I know a lot of you have that as a little bit of a keyword to listen for because everybody's talking about how Palantir is overvalued. Don't fall for that myth right now. We're going to bust it up. But first, let's talk about the earnings announcement that happened yesterday because that does go towards the valuation. Keep in mind, this company's been around for 5 years now. 2020 is when you started to see Palantir start trading, and it's an important part of the history that you're going to learn here over the next 5 or 10 minutes. So last night, they blew away. And blew away is a small number when you're looking at their actual results. 14 cents. And that's why that PE ratio is so high. They beat analysts' expectations. The 14 cents is actually what they earned. They had a robust quarter, and that was a good number for Palantir. Revenue crushed it, jumped up 36% year over year, and that's compared to obviously last year. 827 is where you find it in terms of millions of dollars the company did in quarterly revenue. It's a small number company right now. It's not a Tesla. It's obviously not an Nvidia, but it's big enough to be in the NASDAQ 100 because of its valuation, which everybody's saying is overdone. Not true. This is why you want to keep an eye on Palantir and not get left behind. This quarter, they grew their commercial revenue, and that has kind of turned into what their growth category is right now. They're getting out there in the AI services business, but that grew 64% to $214 million. That's a 10-point jump from last quarter. The AI platform business continues to bring in customers. 400%, we've seen it grow over the last 3 years. Now, something that is going on here with Palantir that a lot of people don't talk about is how they are turning into an AI service company. Their government business, which is what you're looking at right now, it expanded at 45% year over year. So 65 on the business side and then 45% on the government side, right? It's good. The company's getting out there into the private sector. And that's where you're going to find some just huge growth over the next 3 to 5 years. I'm going to take this off screen for a second so I can explain it a little deeper. Over the last 5 years, we've seen AI see its innovation in the way of technology. You've got Nvidia, you've got Microsoft, the cloud, everything's come in to build the engine. Call it the AI engine. You've got the GPUs from Nvidia that are core of that engine, the brain, everything else that's surrounding it, allowing it to do the calculations and moving the data, etc. And then you've got Palantir and companies like IBM and Salesforce.com and ServiceNow. And there's a longer list, and we'll talk about that another day. But you have these companies that are putting that engine into the vehicle that they're taking out to the businesses, and that's where the money's going to be made over the next 3, 5, maybe even 10 years. Quantum computing comes after that. This is an innovation cycle that's going to move very quickly. But remember, the United States is a service economy, so AI services are going to come out and reach almost everybody. And the order of magnitude in terms of revenue that it is going to make over AI technology, what's allowing it to do that work, is going to be huge. That's why you need to be watching companies like Palantir. Their business from the government, that's their foundation, grew at 64% year over year, 10 points. I mean, they've done very well. Management, Alex Karp, came out on their call yesterday and said, we expect to do more business in 2025. They have people positioned in the administration as well that's going to help to get that going. But their expectations are that is going to grow, but they see the big opportunity in the business sector. Another company, as I mentioned it, IBM is already doing that. Check out their earnings report that they just recently dropped because it was impressive, especially for a company like IBM. But I digress. Here's the real business, what's going on right now. The last 3 quarters, Alex Karp and Palantir have raised estimates not only for their fiscal year guidance, but their next quarter's guidance. They've consistently done this, and they've consistently come out ahead of Wall Street in each situation. What they dropped on us yesterday is they see upside revenue of 858. We're going to call it 860 because that's in the middle of the range. Right now, Wall Street expects 800, just under 800. So they are right now knocking the cover off the ball, about 6%, 6.25% or so, better than what Wall Street's expecting. And that number continues to grow. And that is why this company is not overvalued. That is why you can't look at a PE ratio and say this company is overvalued. Give you a little bit of an idea, possibly, if you're just looking at the earnings, but not at the potential. I always tell people, don't fall into the trap of just saying a PE ratio is either a good investment or a bad investment, and it relates to value. If you're sticking with your Procter & Gamble's, your Colgate-Palmolive's, your Hanes brands, etc., keep looking at the PE ratio. But if you're looking at companies like Rigetti, and I'm pulling out some extensive, really, really big PE ratio, they're not making any money. Palantir right now is balancing between 300 and 400 on a PE ratio. If you're looking for speculative growth opportunities, then you don't want to look at the PE ratio and make that simple determination that the stock is overvalued. The valuation is put on the stock by the market, by investors that are buying the long-term perspective. They're not just buying the earnings as it compares to the price today. I hope that's a lesson that you write down. It's a valuable one. You would have missed out on a lot of the 1998, 1999 run in technology if you'd just been looking at PE ratios. You probably wouldn't have bought Amazon for a long time. You know what I'm talking about. Let's keep looking here. Let's get beyond what the expectations are. Here's your summary of earnings for Palantir over the last 5 years, and you'll notice the very, very strong trend that we're seeing in earnings growth, and the expectations are coming up, but they are not high right now. And what you note is that over the last couple of years here, we've seen some substantial performance, and this is because the market tends to underestimate, say that it's overvalued. So underestimate what the company's value is, and that's when you get surprises like we're seeing today with the stock trading 23% higher. So what is the thing that's going to change here? This is it. We already know that Palantir is going to continue to grow their earnings and revenue aggressively, much faster than what you're seeing with the Magnificent Seven. And at some point, Wall Street is going to come off of their perch and say, okay, maybe we need to upgrade the stock. If you've seen Alex Karp talk on CNBC, he's actually called out the Wall Street community and said they just don't get it. They don't understand where we're going and what we're doing. There's a reason for this. Let me go back to that other chart. This is why Wall Street stays soured on shares of Palantir. If you remember back when Palantir started trading 2020 and into 2021, when they first had their first earnings that were coming out, expectations were through the roof because they looked like the dream, the unicorn of AI companies. They were going to go in and use the technology and get to work in the government, specifically Department of Defense was some of their first largest contracts. They were going to get to work and make just incredible revenue and profits. It didn't happen. The expectations were here, and Palantir operated way down here. Wall Street has not forgiven them for that. That's why you don't see the Wall Street analysts upgrading the stock. Today, 14% of them. And that number's going to go up because Morgan Stanley just upgraded the stock this morning, the 4th of February, because expectations are exceeded. They're giving up the value argument right now and saying Palantir is definitely going to go higher. 14% on the buys, 59% holds, 27% are sells. 3 months ago, that 27% was only 17%. So the analysts have actually gotten more bearish on Palantir as it has done this. And we'll be fair and roll the chart back a little bit and say, there's your 3-month view. They got more bearish as it was doing this. Now, at the same time, you have Nvidia, Microsoft, Tesla, Amazon, the Mag 7, who have been going sideways here, and their earnings growth and their earnings surprise and revenue even is right now being challenged. But this is what you see in terms of the recommendations for the Mag 7 companies. This is the average recommendation for those companies, all 7 of them. 13% holds, 2% sells, 85% buys. This is why Nvidia right now can't push itself higher after last quarter's good earnings report. Nvidia dropped a great earnings report on the market and said everything looked good. Blackwell's moving forward, but the stock is now trading lower, and it is because Wall Street has already put everything they've got into that bucket. They can't buy more. It is saturated with optimism versus what we see with Palantir, where it's climbing a wall of worry. A lot of people doubting. Obviously, Alex Karp uses that comment. That is what's going to be special. What you're going to see over the next couple months is the upgrades like Morgan Stanley today. You're going to see price targets rather start to increase as well. Average price for right now for the Wall Street recommendations is $70 per share. It's trading at 103 today, 32% below the current price. So expect to see those go up. And of course, whenever Wall Street gets more bullish, all of you or all the investors out there that are watching Wall Street will say, okay, maybe it isn't overvalued. And I'm telling you today, as a speculative investment, it is not. It follows this pattern whenever we have a contrarian play, which Palantir is a contrarian play. You have to see investors go through a period where they have disbelief. That's a little bit of where we are right now. People don't believe Palantir because, remember, they had that period back in 2021 and 2022 where they just really disappointed. Everybody got rid of the stock. We accepted how bad it was. You got to despair, which is where you buy the shares. And now we're in disbelief that things can continue to get better. Eventually, Wall Street's going to start accepting this, and that drives us right up to that euphoria, which I would argue is where some of those Mag 7 stocks are, which is why it's harder for them to advance. I did a video a couple months back. Check it out if you didn't see it. It was on specifically Nvidia and Palantir and which company was going to double or outperform the other. Obviously, the answer was Palantir. Thank goodness. I hope a lot of you listened to that because it's been a great position to be in. So where do we see the stock going for now? Well, shares of Palantir, when we look at the current price, are trading right at $100. They moved up from about 85. Investors that were paying attention saw a buy the dip opportunity here when it pulled back to its 50-day moving average. Anytime Palantir pulls down to that 50-day moving average, it's a decent opportunity to buy the dip. You're going to see shares kind of bobble around the $100 level for the next week or two, maybe even dip below it because from a technical perspective, we are overbought. Now, just like fundamental valuation, PEs, overbought is something that is identified by the market only. Look here where the stock was overbought and it still was able to go from $60 to $80. So overbought from a technical perspective is one of those things you just watch and say, well, maybe it's going to pull back, but more likely we see a consolidation across 100. My target right now, when I look at where Palantir is going over the next 3 to 6 months, remember they've got their earnings coming up in May. I think the stock's got a good chance at making another 40 to 50% advance up to $140, $150 ahead of that report. Wall Street analysts are going to start upgrading the stock, and that's going to drive more buyers into the stock for the long term. We get another earnings report like this in May, and you're going to see another strong summer for Palantir shares that's going to target $200 at some point in 2025, maybe even into early 2026. But my guess is before we have this conversation next year, you're going to see a $200 and higher price tag on Palantir. That is it. I'm going to remind everybody, take a minute, subscribe, like this. We're going to be doing more content like this again, get things revved up, lots to talk about in the market. Also, take a second and sign up for the free 5-stock watch list. We send it out every Monday morning. It's free. So go ahead and use the link below and get that. We'll give you a growth stock, an income stock, a stock under $10, a short, a stock to short, and a growth stock every single week. Till next time, I'm Chris Johnson with Money Morning, wishing you the best trading success. Have a great day.